Good evening, dear MTBNs. I'm excited to resume our webinar series where it ended much backward. So today, uh, we are continuing with our webinar series, and today is our 151st webinar. And our speaker for the day is Mr. Shivakumar Gokarnation. I thank him for volunteering to do this presentation on implication of GST on credit note transactions. And I would also like to wish all, on behalf of MTBNs, Mr. Shivakumar, a very happy birthday in advance. Tomorrow he is celebrating his birthday. So, Mr. Shivakumar is a chartered accountant by profession, and he is also enrolled at the bar, and he is a practicing advocate as well. So, thank you once again, everyone. And this Now the platform will be with Mr. Shivakumar, but before that, after the end of his presentation, we will have the question answer round. And in this, if anyone wants to ask a question, you please put in your questions in the chat box. And after the session gets over, I will ask I will call upon each and every one of you to present the question in person. And because there's no raise your hands option here. And I request all of you to kindly keep your mic and cameras in mute because I don't have control over them right now. So thank you once again for all to join for the session. And I handing over this to Shivakumar sir. So you can start with your presentation. Thank you so much.
Great. Good evening, all. Nice to be talking in this esteemed group of members here. Before we proceed on this credit note issue, this credit notes is going to be the next set of litigation which we are going to face, especially after a recent circular that has come in the 53rd Council meeting. This is going to be yet another 2A versus 3B nonsense that we saw, and this is going to get continued in this credit note aspect. So before I get into this GST credit note, thanks for the kind introduction, but you introduced me as chartered accountant by profession, but I'm an advocate by profession now. So just on the lighter note, let's get into this credit note. So now what happens in this credit note is that this is a bit of an alien concept for central excise people, manufacturers in the excise era, because we rarely issue credit notes. Once an excise duty is paid, it is done. And if a product, excise duty product, which I've sent to my buyer, if that goods gets returned, I used to take input tax credit or SENVAT credit of that excise duty paid, which means I would take credit based on my own output invoice. That kind of rule was there in central excise law. And in sales tax law, the credit notes was generally reserved for sales returns, even though some kind of discounts are there. So predominantly, again, in sales tax era, especially in T and VAT, if I remember correct, there was a provision under the VAT which said that subsequent credit note do not disturb the original ITC. So in the T and VAT Act, there is a particular provision which says that subsequently, if you're issuing a credit note, it specifically said do not disturb the original ITC. So that provision was there in the VAT Act, which means even under Tamil Nadu, we rarely traders use credit note. In excise also, we do not use credit note. Now, come at the GST, this credit note has been issued. So far, not much has been problem in this credit note because there are other usual suspects like 2A versus 3B, or what we should call as low-hanging fruits for the department to catch up on 2A versus 3B, 1 versus 3B. The taxpayer has made zillion mistakes. Therefore, department was easy for them to make the assessments. Now that the initial year hiccups of the GST are getting over, the returns have become more and more sophisticated, and people have also started getting more experience out of the GST filing process. The regular usual suspects of GSTR 1 versus 3B, 2A, 3B, all those things we are seeing it is quietly going down. And better complaints can be seen even in 1920 onwards. The number of litigations we saw for 1718 and 1819 is much, much higher than the litigations we saw for 1920. And that trend is going to continue. Having said that, now department has also started looking into other aspects. The audits have got more time. So because of the COVID and other things, active audits never took place in many places and everything happened in a rush. 17, 18, 18, 19, 19, 20. It all got merged into one single kind of assessment mode. Now the department have a breathing space, especially after the 24-25 year of assessment is being pushed literally to almost 2030 with an insertion of a new section 74A. So basically, we are going to have a department is going to have solid 3-4 years time for them to complete their audit and assessments. Now, these things are going to matter much, much more. So in credit note, just trying to go to the next slide. Great. So why would you issue a credit note is basically 4 reasons. Now, sales return is an obvious thing. So I issue a invoice. There is the customer rejects the goods either partly or fully. Then I will issue a credit note. There is differing industry practices here. What some customers do across India is that when a supplier sells the goods and they are rejecting it back, they don't send the goods. They actually raise another sale invoice, which means if I sell an invoice for 100 tons, and let's say you are rejecting 20 tons out of it, instead of sending back the goods and allowing me to raise a credit note for 20 tons, what you do is you basically put a sale invoice for 20 tons and send it back to me, which means there's a sale of 100 tons from my side, 20 tons sale from your side to me. That kind of practices are also common. But nowadays, people are also resorting to, no, I'll send the material back via delivery challan. You please issue a credit note for the 20 tons. So that is sales returns. Then comes secondary discounts. Discount is basically the cash discounts which the trading community gets from the manufacturer for making payment on time. That discounts. Deficiency in quality and quantity, that is, you ordered for 100 tons. What was landed is only 99 tons. 1 ton is missing or some quantity or quality deficiency is there. You reduce the price. Taxable value declared more. The last bit is slightly complicated in section 34. I would touch upon it briefly later. But these are broadly the areas in which credit notes can be issued. Now, the funny part is the secondary discounts this comes under section 15. Whereas the section 15 leads you to section 34 for this secondary discount. For the remaining items, you directly go to section 34. That is, section 34 gives the power or the authority for a supplier to issue a credit note to reduce his tax liability. And that power uses the word if the taxable value declared in the invoice is more than the taxable value required to be declared. So by reason of including sales return, deficiency in quantity, or this value is given. The word actually discount doesn't feature in section 34. So then how come discount goes into credit note is that if your value gets reduced under section 15 because of secondary discounts, then basically you have declared more value in your original invoice. Because you have declared more value in the original invoice, then you issue a credit note under section 34. So there is a cross link between section 15 and section 34 here. Now, this section 15 and 34. In section 15, we are dealing with discounts given post supply. So the word used is discounts here. Now, there is a difference between from an accounting parlance also, a discount and a price reduction. A price reduction is something that is a commercial call in nature. So for example, especially in the steel industry, the prices are kept on revised upwards and downwards based on the international market prices, etc. So the steel component prices I negotiate with my customer would be based on what is the prevailing steel prices at which I'm importing my raw material. In those kind of cases, what would happen is that I would sell a material at, let's say, 1,000 rupees per piece. But I would tell the customers, Baba, the prices, raw materials have gone up. I want 1,200. So what the customer would normally say is that, okay, no problem. you right now you supply the goods to me at 1,000 rupees. Let's keep this price as a provisional price. Then what we do is let's go and finalize the price 3 months later. Then we will decide accordingly. Then finally the people will sit across the board and they let's say finalize the price as 1,150. So there's a price increase here. When a price increase, no problem. I will raise a debit note. I will pay more tax. My buyer will get more credit. There ends the matter. The converse is also true. So I am selling the product at 1,000 rupees per piece. At that time, the customer comes and says, "Hey Shiva, I see the raw material prices have gone down significantly, and you're still charging me 1,000. I think it's fair if the prices are dropped to 800 rupees." Then I say, "Boss, all this needs a detailed calculation. My other prices have gone up, my other overheads have gone up, X, Y, Z have gone up. Therefore, 800 I can't do it. But let's discuss. Let's do one thing. Let me continue to bill at 1,000 rupees. Let's park our discussion. Let's discuss for next 2-3 months. Let's decide." Then they discuss for 2-3 months. They finally agree. I have to bill at, let's say, 870 rupees, which means I have billed at 130. So basically, the price that was agreed at the time of the original supply is a provisional price. Now, again, the old timers in central excise would be very comfortable knowing this. When your price at the time of removal of the goods from the factory is not final, you have to go for a provisional assessment, because in the invoice we have to declare in central excise era that this is the actual value. This is not a different value. This is the final value. If you do not know the value, we have to go for provisional assessment. Now, in GST also, there is a concept called as provisional assessment, though I don't think many people are using that option. So should you declare at the time of invoice that my invoice value that I'm printing in the invoice is at 1,000 rupees in my example, that is a provisional value. Of course, if I'm increasing the price, debit note, then there is no problem because I'm paying more tax. The question that will come in debit note, which is a separate discussion altogether, is whether the debit note value will it attract interest? What's the time of supply for the debit note? Will that attract the tax from day number one? Then we have to go to the supplementary invoice concept that was raised in central excise era from Supreme Court, wherein Supreme Court said that even for price increase, I have to pay interest. Then they said no need to pay interest, and they again said we need to pay interest. All that flip flops, all that we need to do, redo the entire circle in GST era. But having said that, debit notes fair, morely no issue because we are paying tax. So what about credit notes? There's a price reduction, not because of discount, but because of genuine commercial transaction. There is a GS circular which clarifies this point, but in a very vague manner. If you read the circular, you will neither understand are they saying it is permitted or it is not permitted. That kind of wordings is given. But discount cannot be equated with price reduction. So why this distinction is important? What is a discount? A discount is something that is pre-agreed. If I do this, you will get this. Mostly discount is in the way of either a cash discount or a quantity discount if you're taking more quantity, or a price discount in case if you're making payment within time. Generally, what happens is they will say, if you purchase the goods at 1,000 rupees, if you pay within 30 days, I'll give you a 2% discount. If you pay within 60 days, I'll give you a 1% discount. These terms are agreed at the time of sale itself. It's a standard dealer agreement. The person will make a payment on 20th day and he will give the 2% discount. I'll give him 20 rupees discount. Only this discount is envisaged in section 15. The word discount cannot be equated with price reduction, according to me, in my opinion, if there is a commercial renegotiation of the 1,000. There is no doubt that the value is 1,000. The value of that product is 1,000. Only the time value of money is adjusted because he is making the payment early. That is the only discount that is contemplated under section 15, according to me. A mere price reduction by way of negotiation, either retrospectively or you even start the negotiation in the future retrospectively, or you start the negotiation at the time of supply, you conclude it later retrospectively, will not be called as a discount. That will be a price reduction. So there could be a technical argument raised by the department that this price reduction per se does not feature in section 34. Because if you go to section 34, if I can just pull up that section. Just give me a second. Share the entire screen. So if I just use the section 34, I hope you can see the section 34. It says, I
Yes.
can issue a credit note for supply of any goods or service or both. The taxable value and charge in the tax is found to be exceed the taxable value. That is one scenario. Or where the goods have been returned. Or where the goods and service are found to be deficient. There are only three scenarios envisaged here. Now, price reduction in a retrospective way cannot be called as deficiency in goods or service, cannot be called as goods return. Then the only scenario where I can bring it in is, can it be called as a taxable value reduction? If I want to call it a taxable value reduction, then I have to say my value itself is 860 rupees, the reduced price, and not the original 1000. For that, I need to be able to prove that my value under section 15 is 860 or 870 and not the 1000 which I charge, which takes us back to section 15. In section 15, there is no reduction apart from discount that is given in section 15. The discount I just now we discussed that the discount can only be called a cash discount or something in the nature of 1%, 2%. You cannot call 150 rupees a price reduction, may not be possible to be equated with discount. That leads to an interesting question. Then the price reduction then would not entail a credit note at all. Is that what we are trying to say? No. Still, it could be possible to argue that a price reduction in a commercial sense would go to the fundamental concept that what is the meaning of the word value? Value is something that you charge, that is a price, is the value of a supply. So what is the price? Price is something the buyer pays. The buyer said that time he will pay 1000. The buyer now finalized the price at 870. Which means the price that has been finalized now is 870. Therefore, the value is 870. Then again, it leads back to the question. Then no, but the value at the time when I raised the invoice was 1000. The value that subsequently got confirmed was 870. Now, what is the value? Is it the price at what time? Can the value can remain fluid for a long time? What if you go back 5 years and revise the price? Can a value be revised? Yes, there is a time limit to issue a credit note under section 74 by next November. But having said that, can I go back any number of years and say I will revise my price down? Is it permitted? Value of supply should be seen when? Can the value of supply be kept open for a long period of time? These are the questions that needs to be factored in and argued and answered. Now, one way to get over this problem, especially if there is a very large transaction is involved or an ITC is not eligible for a buyer and we need to protect the tax liability in some cases, a provisional assessment can be done where I can say to the department saying that I do not know the value, which means the value I'm declaring in the invoice is not at all a correct value, it's only provisional value. Then a price reduction argument can be taken that there is a reduction in the price itself. If I don't go for provisional assessment, there is a very valid argument that department could take saying that you declared in the invoice at the time of supply, you raise the invoice, there ends the matter. If you want to reduce that invoice value, section 34 says 3 scenarios: the sales return, deficiency in quantity or quality, that is not covered, change in value. Change in value can be done only by way of a post-supply discount. Price reduction cannot be equated to discount. I'm sorry, you cannot issue a credit note. That's a very, very valid argument. So the thing that would be interpreted before the court tomorrow is, can I reduce my price on a commercial level transaction? Can that revised price get substituted to the original price declared at the time of supply? And that revised price can it be called as a value of supply? So this question is something that needs to be debated and deliberated upon. Now, let's leave that price reduction point aside. Let's look at from a purely from discount perspective. Okay, what about discount? Discount, can I issue a credit note? The answer is yes, you can issue a credit note for discount, provided the buyer is reversing the credit. Now, there is a very interesting issue here. If you read section 15, 15 says discount that is recorded in the invoice will be reduced. Okay, that is fine. I'm selling a product at 1000 rupees. In the invoice itself, I'm saying less 10% discount. The final price is 900. Fair enough. The value of supply is 900. Department is happy. Everyone is happy. But if the discount is given after the supply, there are two conditions. Condition number one says the discount should have been agreed at the time of supply. Fair enough. Again, as I said, that the normal terms of the contract are if you make the payment within 30 days, 2% discount or 1% discount, whatever is agreed at the time of supply. Now, again, there are some very intricate nitty-gritty points here saying that should the agreement be in written agreement? Can there be an oral understanding? What is an agreement? And all the contract law saying that even oral agreement is fine. All that come into picture because most of the companies do not operate a written agreement. There is an understanding. So establish in terms of the agreement. So how do you establish a oral contract? So that is something that we need to again bring the contract law into picture. The second, let's park that aside saying that, okay, let's face it as and when it comes. The second condition is even more interesting. The input tax credit as is attributable to the said discount has been reversed by the supplier, reversed by the buyer. So if you have 30 rupees discount, on that 30 rupees, buyer has to reverse the credit. Only if buyer reverses the credit, then such discount which I gave after the supply will be allowed as a reduction in the value. Only if the value is now reduced from, let's say, earlier 1000 to now 970, then section 34 will kick in. 34 will kick in only if the value declared in the invoice, 1000 in my example, is more than the value to be declared, which is 970. Then I can issue a credit note. For the 1000 to become 970, he has to reverse the credit. Meaning, without the supplier, without the buyer reversing the credit, you can never reduce the value. Without reducing the value, you cannot issue a credit note. But the problem is, without issuing a credit note, the buyer will never reverse the credit because we are now caught between the what is written in the law and the computerized manner in which this GST law is being implemented. Right from 2017, the GSTR 1, 2, 3, 2A, 2B, 1A, 3B, now all this IFF, all this, the GST law seems to be some kind of a science fiction, which rarely happens in reality. But the laws are written assuming all those 1, 2, 3 will work. Whereas we all saw that 2 and 3 never work, and we are stuck with GSTR 1 and 3B. So many of the provisions are on the assumption that 2 and 3 will work. Without the supplier issuing a credit note, how will the buyer know he has got a discount? Why would a buyer, on the presumption that he will give a discount, reverse a credit? What if he reverses the credit but never gets a discount? And he never gets a discount. Can he now retake the credit? There are case laws in central excise which says, if I reverse a credit suo moto for whatever reason, then I subsequently find that I made a mistake, I may not be able to take recredit. I have to go to the department to ask for a refund application. So no buyer is going to reverse a credit suo moto, meaning he will wait for a credit note from the seller. Only when he receives the credit note, then he will reverse the credit. A cantankerous buyer will receive the credit note, but he will not reverse the credit. That's a separate matter. But every supplier, every buyer will wait for a credit note to be officially received from the supplier with the GST. Only then he will reverse the credit. So the and the returns also like that. So when a supplier issues a credit note, let's say we are in 28th of September, issues a credit note today, 28th September, he would report it in the September month GSTR 1. Let's say he files it properly on time on, let's say, 10th or 11th of October. And that will get reflected in the 2B of the buyer again for the month of September. The buyer will say, okay, credit note has come. He will reverse the credit. Now, without the form structure is that scheme of things in return filing, first credit note, then reversal. But the section 15 says 999, first supply buyer has to reverse the credit. Then only you can issue then only there's a reduction in the value. Only when there's a reduction in the value, you can issue a credit note. So the section 15, section 34, but the return filing process are in logarithms with each other. This cannot be reconciled. But we can say one thing. Okay, sir, as long as I raise the credit note and they have reversed the credit, no harm done. As long as he reversed the credit, we don't have a problem. But that's okay. But for a little bit more nuanced approach, which comes first, chicken or the egg? Scientifically, they've established as chicken, but we need to establish it here. Which comes first, whether my credit note or his reversal? That is a very interesting point here. But now the question is, okay, let's assume the buyer has to reverse the credit. Now, how will you prove that my buyer has reversed the credit? There is no way I can prove that my buyer has reversed the credit. That is the issue here. Now, what this has led is they have issued one circular again in 53rd Council, wherein they have clarified that, or rather not clarified, they have basically imposed a brand new condition. This will be our an analogous circular to our 2A circular, where it said, okay, supplier has not shown the invoice in your 2A, you go and get a declaration from all your suppliers that he has paid the tax. If the aggregate value is more than 5 lakh per supplier, get a chart account certificate. They have brought verbatim the same clarification, or rather an imposition under this circular. What they're saying is that, okay, you have issued a credit note. Koi baat nahi. Has your buyer reversed the credit? You get a list of credit notes issued for discounts. Each value is less than 5 lakh. If it is less than 5 lakh, the buyer, let him give a self-declaration saying he has reversed the credit. If the GST amount is, let's say, more than 5 lakh, then he should get a CMA certificate to prove that he has reversed the credit. Now the question is, you can comply with the circular and try getting a certificate. But the question is this circular even valid? From which act or which rule is this circular being issued? But the problem is, without you challenging the circular, you cannot say the department asking circular is wrong. The settled case law circular is binding on the department. It is not binding on us, but it is up to us to challenge the circular before the High Court. If you are not going to challenge the circular, then you will not be able to argue saying that I will not comply with the circular. We can argue saying that no, circular is invalid before the normal scheme of appeals and go to tribunal, then come to High Court. But the officer will stick to the circular, which means if you are not going to get this certificate done, self-certificate or a CA certificate, then this will fly. From whatever provision I have went through, the circular is ultra vires of both the act and the rules. Even in the rules, there is nowhere which says that this kind of certificate has to be obtained. But the question is again, how would you prove it? Now, what I'm saying is, okay, I need to prove it, fine. But unless a mechanism is provided inside the act and the rules for me to provide, in the absence of a procedural mechanism prescribed, the entire provision needs to be treated as unimplemented. We have to ignore that provision. You cannot just put a provision and do not give a corresponding implementing mechanism. The interesting thing is, the circular itself says there is no implementing mechanism in one of the paras, which means the department now accepts, we have a provision, but nowhere in the act, nowhere in the rules, we are saying how to implement that. That section, interestingly, section 15, just go through, it doesn't even say discount has been reversed in such manner as may be prescribed. Generally, you find the word in such manner as may be prescribed. These loose words will be there. Even if that such manner as prescribed is there, we can at least say that, okay, they can bring a rule, probably 18 and BB, they are keep inserting rules, and that's say you have to get a CA certificate. But when the manner prescribed is not there, can you impose a restriction or a requirement on a supplier that he has to get a certificate from everyone? Why is that required? So that is a interesting question. Again, let's assume for some reason circular is held valid. We need to comply with the circular. But the next thing that opens up, the circular is issued in 2024, August or July. And departments are now demanding for 2021, 21, 22, for even 17, 18, 18, 19, 19, 20, they have issued notices under section 74, invoking suppression and extended period of limitation, saying that you never gave the certificate as per the circular. Therefore, we are disallowing all the credit notes. Okay. Then a circular which was issued in August 2024 prescribing a methodology can never be applied to past cases. So if you are going to apply it to past cases, how can I comply with something which was never there at the time? Now I cannot go back to 2021-20. The COVID has basically wiped out half the businesses. I cannot go back to my buyer who may exist, may not exist, may have good relationship, bad relationship, and say, boss, you give me a declaration that you reverse the credit. I may not be able to do so. Can you fasten a liability on me just because I'm not able to comply with the circular, which was never even in existence at the time the transaction was happening? Today, it's a different matter. After August 2024, if you're issuing a credit note, a discount-based credit note, and then you're still not collecting the certificate in terms of that said circular, then you are inviting trouble. Even though the legal arguments of circular is valid or invalid, ultra valid, that stands. But at least someone with a reasonable mind can say, now that you know the circular is there, at least for now you comply with it. But you cannot ask me to comply with it for 2021, 21, 22, 23, 24, April, May, June 2024. That may not work. So this is the issue that's going to come up in this discount-based credit notes. Now, one interesting part which needs to be done is the Section 34 discount. If you see, sorry, Section 34 credit note. I'll just take you to Section 34 again. It will be very interesting. So in Section 15, it says, for the post-supply discount to be considered as a reduction in the value, the buyer has to reverse the credit. Now the value is reduced. Consequently, the value that was declared in the invoice is now found to be exceeding the value that is required to be declared. Therefore, I issue a credit note. This is the chain of event. Now, what about deficiency in quantity credit note? What about a deficiency in quality of service credit note? What about deficiency in quantity? I sent 1,000 tons, but there is a 100 kg shortfall. 2 tons, 100 kg shortfall. What about partial sales return? I'm issuing invoice for 100 kgs, 20 kg gets returned, sales return. Now I issue a credit note. Now, should I get a declaration that the buyer has reversed the credit even for those credit notes? The answer is no. Answer is no. There is no requirement under Section 34 that you can issue a credit note only if the buyer reverses the credit. Meaning that even the circular which the department has issued has very clearly restricted, strangely restricted itself only to credit note emanating from post-supply discounts or secondary discounts. It did not sweepingly say, which I'm very surprised that they did not do, but all credit notes, the buyer has to, the supplier has to prove that his buyer has reversed the credit. They never said it. So circular is applicable only to credit notes which is issued because of post-supply discount. Then what about supplies, credit notes issued for the sales return, deficiency in quantity, quality, etc. And also the price reduction credit notes, if we are able to somehow argue that the price reduction credit notes are can be still issued under Section 34. Then those are not Section 15 post-supply discount emanating credit notes. Therefore, there is no provision in the entire Section 34 for me to require that the buyer has reversed the credit. Which means I need not prove my buyer has reversed the credit. But what will happen? There is no distinction in my GSTR 1 return or in the GSTR 3B return between a credit note which I issued for a discount vis-a-vis the credit notes which I had issued for other cases. So department would sweepingly send you a notice saying that we found that you have issued a credit note for 25 crores. You have not submitted the circular. Therefore, I will disallow this 25 crores. Pay 18% tax on it. Even though the original invoice was for 12%, I will demand 18% tax. That is a norm today. If your original invoice is 12%, I will demand a tax of 18%. or even on credit notes. That kind of notice is going to come. So now then you need to carefully reply to those notices saying that was your circular, the validity of the same X, Y, Z, all the apart from legal arguments. One more nuanced point is that requirement is there only for post-supply discount and not for other credit notes. Even the circular which you are relying upon doesn't talk about other credit notes, talks only about post-supply. Therefore, this requirement is not there. Out of my 24 crore credit notes, only 1 crore pertains to discount, rest are sales returns and deficiency and etc. Therefore, that is out. Only 1 crore remains. So we have to reduce the litigation. I'm very sure none of this will happen, and we are going to be flooded with petitions in the High Court, where it's going to say that they have issued for every credit note. This is going to come, and we are going to see orders that are going to be passed by at least the state tax authorities, saying that you have to get a certificate for every credit note. But there is an interesting requirement that is there in section 34, which is not there in section 15. That requirement is in the proviso. It says, provided no reduction in output tax liability of the supplier shall be permitted if the incidence of the tax and interest on such supply has been passed on to any other person. Now, this incidence of tax, again, in central excise, we don't know how much case law starting from Mafatlal onwards, which said you even if you issue credit note, I will not accept that you have passed on the incidence. We will not accept. Once original invoice is raised, it is gone. Then subsequently, many high courts have tried to soften that Mafatlal blow by somehow to go within Supreme Court, but slightly away from Supreme Court by saying that no, credit notes when I'm issued, it should be considered as a incidence not passed on. Sorry, incidence being not passed on, therefore eligible for the refund of excise duties. So there may be a dispute whether mere issuance of credit note, will it be sufficient? Okay. So what we need to probably prove is the credit note has been posted in the ledger of the customer, wherein the ledger balance of the customer payable has been reduced, or in his subsequent sales for, let's say, 20 lakhs, we told him to pay, we raised invoice of 20 lakhs because of this credit note. He paid only 14 lakhs. Then we have to prove that originally in the invoice, I passed on a higher incidence. By subsequently, by giving him a credit note and crediting to his customer ledger, I have reduced the incidence of the tax. So this incidence of the tax is incidentally is not there in section 15, but it is there in section 34. But the problem again that will happen is that even section 15 discount will eventually come to section 34, which means you need to again prove the incidence of tax for any kind of credit note that's discount or any other credits. So that is now leading to a next problem. How do I prove that I have not passed on the incidence? So what is basically happening is every issue that many of the seniors here and many number of seniors decades prior to us have diligently worked to create a set of established, these things are all established. These are not disputes. Those kind of things are now being reopened in GST. Take for the instance of pre-depositing being paid out of credit. This is something that has been settled in excise law for 1500 years. Now suddenly department of excise says, no, that is under excise law. This is GST law. So this point is also now is going to get reopened because exact wordings are there in central excise law also in 11B. No refund shall be eligible. If the duty have been passed on, then the refund shall be credited to the consumer welfare fund. Now, interestingly, there is no consumer welfare fund here. So if once I issue a credit note, then the tax will go, but my output tax liability does not get reduced. But government also cannot keep the tax. Government has to then pass on the tax to consumer welfare fund. That provision is there in section 54, that where refund is eligible, but I have passed on the incidence, then that refund will go to the consumer welfare fund. It will not come to me. But similar analogous provision is not there in section 34. Now the question that would come up is, once I've issued a credit note, then government cannot keep that tax. But let's assume I have passed on the insurance of the tax. I have not proved that I have not passed on the insurance. Then can the government keep that paisa? Where will that paisa go? That limbo problem is there. Then is mere credit note can be called as insurance passing on. I have to prove it's an insurance of tax has not been passed on. So according to me, the negative case laws in central excise, which says that no, mere excise without credit notes cannot be accepted as passing on, may not hold water in GST era, because unlike in central excise where I do not upload invoice-based data, here I'm uploading invoice-based data. Since I'm uploading credit note invoice-wise, especially for a B2B majority of these problems comes for B2B transactions, automatically it is reflected on the 2B of the buyer. The buyer would then be aware that he has got a discount or a reduction in the value or a price reduction or whatever it is, that the buyer will be very much aware. When the buyer is very much aware of that issue, he would obviously take benefit of it. He would not want to make that payment to the supplier. Earlier eras, I can issue a credit note for my book purpose, but I will never inform the buyer. I would hold that credit note as a negotiating tactics, but I would issue the credit note in my books, in my returns, but the copy I will not share it with the buyer. Today, that is no longer possible in the advent of e-invoicing, where every credit note gets everybody more than 5 crore. You have to issue e-credit note also for B2B transaction. So that gets instantly report available to the buyer, as well as in your GST account, it gets instantly reflected. So in this electronic era, we need to revisit even those negative case laws, where we are saying insurance, just by issue of credit note, you cannot say the insurance have not been passed on. That may not hold water in the electronic era, where the buyer is now instantly aware and therefore would be actively trying to take benefit of the credit that has come to him electronically, even if he has not received such enough form of paper as a direct communication from the supplier. He would say, no, you have uploaded in the GST portal, which means you have taken the tax benefit, which means I will not pay you the paisa now. So that, I think people are a little bit more smart now. So those case laws have to be now revisited under the current electronic era of digital era of tax filing. Does it still hold good that a mere piece of paper? Now the credit note is not mere piece of paper. It is not a mere credit note. It's an electronic credit note. It's a credit note which is reported to 3 people. Reported to the seller, reported to the government, reported to the buyer. Buyer is aware of it, government is aware of it, obviously seller is also aware of it. So we cannot say it's a one-sided transaction. Buyer may not be available. No, he may not know. You may still recover the paisa from him. You never proved. Those kind of arguments may not hold water. So this incidence of tax is yet another thing that we need to carefully work upon. So we have covered this section 15, reversal and ITC, credit notes for discount and price revision, and this circular. Now, coming to the time limit for issuing credit notes. This is an analogous provision to section 16.4. So basically 16.4 is something that every one of us have at some level or the other fought the matter. So basically now 16.4 they have introduced 16.5 and 16.6 basically for the past period. Now the same due date that is mentioned in the revised 16.4 that is there today, the November due date, is the same date that is there in section 34 also. Interestingly, there is no time limit mentioned in the law for debit note, of course, obviously, because debit note is something you increase the value, you increase the tax, the department is very happy. Whereas for credit note, there is a time limit mentioned because they don't want you to disturb the last year transaction. The time limit that they have mentioned in the section 34 is 30th November. Okay. Now, the dispute that was there in section 16.4, the same dispute that is there in this section 34 for the past period is whether the 30th September, September month return, that is the 20th September where we filed the 3B, is the date affixed or should I report the credit note or claim the credit in September month return? The 16.4 problem arises when for the past period, as you're all aware, that for a March, let's say March 2020 GSTR 3B, I filed March GSTR 2023B. I took all the credit, but the only problem was instead of filing the March 3B in April 20th or so, I filed it, let's say, in December 2020, after, let's say, 9 months. So the credit was claimed only in March 2020 return, but the return was filed in December 2020. Now the interpretation problem was, the credit was taken in March 20 return. The credit was never taken in September 20 or October 20 or December 20 return. Credit was taken only in March 20. So the argument of the taxpayer was I have taken the credit only in March 20 return. So credit is not time barred. The argument of the department was no, you should have taken the credit by 20th October, but you took the credit only by December. Now that instead of referring to a month return, now in section 16.4, more so in section 34, they have put a particular date saying that I don't care if your credit note is dated which date or filed in which month return. That I am not bothered. The law says I am more bothered when are you declaring that credit note in the return. So such declaration cannot be after 30th November. So meaning obviously November month return I cannot file it in November. So which means the earliest I can file it is in October month return. So for example, we are right now in September. So for example, 2023-24, if I made any supplies, I need to issue a credit note. If I'm a regular, normal taxpayer who has been diligently filing the return, October 31st is the last date for me to issue a credit note. Because whatever credit note I'm issuing in the month of October, I can file it in GSTR 1 of November, which I file it on 11th November, that's the due date. Even if I delay it by 1 or 2 days, I have no problem because I have to declare it by 30th November. If I do not declare it by 30th November, then the credit note is gone. Now let's take 3-4 scenarios here. Let's try to understand it. An invoice is raised for, let's say, in February 2024. Later, there is a complaint by the customer or the price discount or whatever it is, or a sales return for that matter. Therefore, a discount of, let's say, 1 lakh is issued. The credit note is dated 1st December. It's gone. The credit note is dated 1st November. Then also it is gone because a credit note for 1st November can never be declared before 30th November because the earliest I can declare that credit note is in December 1st when I file the GSTR 1 for the month of November, which means even 1st November credit note is ruled out. What if the credit note is dated 25th October, but I am declaring it in November month return or December month return? Can I take an argument that no, credit note is within 30th November, only reporting is missed? Only reporting is missed. Can we say that? I have my doubts. It's very difficult to say that because now the section is little bit worded saying that shall declare such credit notes in the return for the month when such credit notes issued, but declaration, but not later than 30th November. Now, whether this 30th November is for the declaration or is this 30th November is for the month? Again, that is not very clear. The English is very, 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 very vague. If you read the English, one way to read it is, any registered person who issues a credit note in relation to supply of goods or service or both shall declare, but not later than 30th November, the details of such credit notes. If you read it that way, put a comma and read it, then declaration is the criteria. The other way to read it is, shall declare the details of such credit note in the written month during which such credit notes has been issued, but not later than 30th November. Meaning, in the November month return, I have to declare the credit notes. There are 2 ways to interpret it. Again, the intention of the government is to say that the declaration, that rate of filing of the return should be November and not November month return. Just give me a second.
Shiva would appreciate repeating this.
Just 1 second, just pulling out of my charges. 1 second. Yes, sir. So what I'm saying is, let's take a scenario. I have issued a sales invoice in February 2024. Okay. But let's take so let's say my date of invoice is 12th February 2024. I issue a credit note dated 15th May 2024. Now the credit note is well within time. But the more important thing is, when am I declaring this credit note? So ideally what happens is that I will be declaring this credit note in the month of May 2024, GSTR 1, and the return I will file it on 11th June. This is a normal scenario. Now the question is, let's assume I don't file it on 11th June, I file it on, let's say, 28th of September. I am filing the GSTR 1 late for the month of May 24. Am I okay? Yes, still okay. I'm filing this return itself on 30th November. That is, I'm filing May 2024 return itself on 30th November. Am I still okay as per the department interpretation? Yeah. But what if this May 2024 return is uploaded, let's say, on 5th December 2024? Now, if the interpretation number 1, that is, shall declare the details, but not later than. The question is, this but not later than is for what? Is for the declaration or return for the month? Where are we going to fix this 30th November? That is the question. If you are going to fix this 30th November for declaring it, then if I don't declare it before 30th November, in our example, then for this I will lose the credit. But on the contrary, if you're going to but not later than 30th November, meaning month ended 30th November is the month of return, which means I'm declaring only it in the May 24 return, which means I'm well within time. Which means the second argument is, as long as November 24 return, whenever I file, let's say I'm filing this November 24 return in the month, in the date of, let's for the sake of argument, in 2026 February, I can still take the benefit. That is one way of arguing. The other way of arguing from the department perspective, no. 30th November is the time date that is written in sand, drawn in sand. So any return should be filed before 30th November. So for some reason, you've forgotten to file your returns and you wake up on 1st December and you're going to now say, I'm going to file April 24, May 24, June 24, July 24, August 24, September 24, October 24. This 7-month return, let's say you wake up on 1st December and you realize you have not filed it. And you're filing it on, let's say, 1st December. All the credit notes which you have issued in these 7 months, and those credit notes, if it pertains to the last year sales or services or last year supplies, then those credit notes would be called into question because you never declared it before 30th November. On the contrary, as long as it is declared in the month before 30th November, we can take the credit. Which are we going to take? Again, I think if government wants to put it, this is some basic English writing, they can clarify it in a much more simpler manner. This is calling the litigation, it's like waving the bull. Okay. So basically that is the issue. So 30th November is the deadline. Now, one more interesting is, what if my registration gets cancelled? Let's say in May 2024. Then I fight, I move I file for revocation. The revocation gets rejected. Then I move the High Court. Then finally I get my registration back on, let's say, 5th December. Now I am filing my returns. I'm sorry, you have missed the 30th November bus. Interestingly, in section 16, they have given that way out. If your registration gets cancelled, subsequently it is revoked either by the department or by the judgment of any appellate authority or the court. Then if you file your return within that 6 months from the date of that revocation, a judgment order or appellate order, then your credit gets protected. Your 16/4 time limit of 30th November is not hit. But here that protection has not been given. The situation is analogous. My returns, my registration is cancelled on, let's say, July 24, retrospectively May 24. Since my registration was the date of cancelling on July 24, I had the powers to issue a credit note. But now I am not able to declare it because my registration got cancelled. I fight, I get it. Now it's too late. Now it's 5th December. Department will say, I'm sorry, you missed the bus. And there will be another retrospective amendment called 34(2)A. Please note those, it will happen in the future, which says that if the registration got cancelled, subsequently revocation happened, then the credit note should be issued within 2 months from the date of such. All that's going to happen. Right now, as the law as it stands today, for a person whose registration is cancelled, subsequently reinstated for whatever reason, if he's filing the returns, his input tax credit may get protected, but his credit note reduction, he may not be able to get tax benefit on. It is yet another interesting, or rather very timid item. So cancellation revocation is the question. Now, I have covered the basics of the credit notes and these things. So instead of being a monotonous discussion, I would rather have it as more of a discussion, if you may have it. I'm just open for questions. Or anything else, specific points you want me to clarify, I can clarify, or else we can move it to questions.
Thank you so much, sir, for the presentation. I request you to stop sharing the screen so that we can have an open meeting. Thank you. Dear participants, now the platform is open. We can have a group discussion round if you want. And if, apart from questions, if there are anything more to be added in this, you are most welcome to come forward and share your thoughts on the presentation as well on this particular topic. And my apologies, sir. I wanted to say that you're a qualified chartered accountant, but now practicing advocate.
More in jest.
Yes, yes.
In 34(2), with
Yes, sir.
no comma in any of the places, I have my reservations as to whether any alternate, interpretation than what the department would think would at all be possible in the first place. That's why I
agree,
wanted
sir.
you to repeat on that.
I agree,
Language,
sir.
one minute. Maybe the language could have been better with appropriate usage of comma.
Yes.
But in the absence, I think it is more favorable to the department than the alternate argument that the SC could raise.
Yes. I agree, sir. I agree. There's no doubt. But the only thing is, if practically what is happening, if you go to the GST portal and if you try to accept, you need to try uploading credit notes after 30th November, it is stopping. It is saying previous year invoice cannot be issued. So those kind of problems are being raised.
Okay. On the other issue, which you said, the triangle with reference to credit note, the deficiencies in service or reduction in goods, etc., whatever be the reason, and the reversal of credit.
Hmm.
You rightly mentioned saying that as any supplier would, he would definitely not look for reversal of the credit unless the credit note comes.
Correct, correct. No buyer will do it. No buyer.
And the section is unfortunately not worded so. How is it
Yes.
practically resolved?
The practically resolved is now practically resolving at least post facto if they reverse, prove it to me.
Okay. The department does not object in such cases,
Yeah,
saying
yeah,
that no, you are reversed. That it is prior to credit note, it is reversed after issue of credit note. Therefore, we will not recognize credit note is not what the department says.
No, they are not. That they are not saying. As of now, they are not saying, sir. But as I'm saying now, sir, the as the law becomes simpler, sir, I think more officers should be reduced. The problem is that you keep having the same number of officers, so they try inventive ways to justify their existence. So that is going to lead to more absurd interpretations.
So it's possible that somebody raises tomorrow saying that no, this reversal has happened after you issue the credit note. Therefore,
Yeah,
the credit note is not in accordance with law. We will not
yeah.
recognize.
If I am the officer, I will raise it, sir. Just for the fun of it, I will raise it. Your right to reduction in the value never arose before you issue a credit note.
Yeah.
Therefore, you cannot issue a credit.
Okay.
Thank you,
We wish the officers do not go to that extent, and at least we wish that Shiva is not in the department.
Thank you, Balaji, sir.
Any questions? Is there in the chat or somewhere?
No, sir, I have not got any direct message.
Okay.
I have had the benefit of private discussions with Shiva on many occasions. I should definitely once more appreciate his immense knowledge and the skills of presentation. This is one more occasion. I appreciate it openly.
Sir, you're too kind, sir.
He has organized the right thing through the right speaker.
Definitely, sir. Thanks. Sir, Natarajan, sir, if anyone else wants to add on to this point, Raghavan, sir, is also there. Maithili ma'am is here. Muthu, sir, is also here. APS, sir, is there to give his trademark concluding remarks as well. So we will ask APS, sir, to wait for 2 minutes before we conclude this.
Prithvi, I think we can conclude.
Yes, sir.
Yes, because Shiva has explained.
Yes.
So, if there are any questions, we will take. Otherwise, let's conclude.
I think Maithili ma'am has come in.
Yeah.
Ma'am, you can unmute yourself.
No, he has explained extensively and all the nuanced questions also. There will be a lot of practical difficulties in implementation, and a lot of interpretation issues will come up because by nature, credit notes, whether in the central excise regime or later, here there's a small correction I will make here, Shiva. His central excise was replete with credit note cases. It was to do with trade discount mainly. What happens and all of that, which you mentioned, of course, about the interest, whether you pay price variation, all those things were there. But today, I think when it comes to credit notes, what happens when there's a dispute on whether there is a deficiency in service or there's a shortage? Where is the remedy? Ultimately, you don't. The buyer says, "No, I am not going to pay you the full invoice value." And he succeeds in his claim, and you have to say, yes, I agree, I have to accept that this is what is due from me.
Yeah.
Where is the remedy when it comes to the existing timelines and all that? That is
Mhm.
going to be a challenge. Whether
Well, there's a
So
double
if you
punishment
can,
here
if you
because
have any thoughts.
yes, it's a double punishment because under section 16 there is a provision which says that if the supplier, if the taxpayer fails to make payment to the supplier within 180 days, he has to reverse the credit.
Yes.
So now what has
Correct.
happened is he has reversed the credit because he has
Correct.
not paid within 180 days. But I have not
Hmm.
issued credit note because the deficiency is not communicated to me, or rather we are fighting the
Correct.
deficiency. Eventually the time runs out. So the department, see, that's why my question is, in those cases, can I invoke provisional assessment? Because then, at least at the finalization of assessment, refund claim can arise. So
No,
can we explore 54 on provisional assessment? See, we have to go back to the same central exchange. We have to now reinvent the wheel again to rethink about provisional assessment in these kind of cases.
No, the only problem is provisional assessment. At what stage do you opt for provisional assessment? This dispute happens during the course
Much
of
later,
regular
much later.
transaction.
Yeah.
Much later.
Then it becomes
So
difficult. Because
otherwise,
much
every
later.
assessment has to be provisional assessment. That's the problem.
Yeah. Agreed. So that is the challenge here. That is the challenge. Many people, what they're also doing in practical way to get over is to whatever money they don't get, they will randomly issue credit note to close the books, and they will raise a fresh invoice as a counterclaim.
Yes.
So just by extending it. So all these kind of, there are many people, businessmen have found many tricky ways to get over it. But again, we have to test it in with section 16 and 30 whether there are even valid credit notes. Because there's a crime if I issue a tax invoice without supply. But it is not actually a crime if I issue a credit note without actual reduction in the value. It is actually not a crime. It is not a punishable under 129. Whereas if I issue an invoice without supply of goods, or a supply goods without invoice, that is a crime under 129. But surprisingly, which means I can randomly issue a credit note, but it is not a punishable offense. So we need to now test all those things. Agreed.
Thank you so
Thank
much,
you.
ma'am. Thank you. And also, for the information of everyone who was present here, Mr. Shivakumar every month shares an article where he, sir, it's yours only. So the online article which you send it in the group where you discuss about all the current affairs and something like. Okay, then I'm sorry.
There's some other intelligent Shivakumar out there.
I'm sorry, my bad. Sir, yes, sir. I call upon APS sir to give his concluding statements to this thing.
So it's happy to see all of you here after a very long time. Today I'm happy with the commencing of our webinar series. And iconically, the 151st webinar was held by the fit person. We can say today's speaker Shivakumar, he spoken very authoritatively and confidently and explained all the issues relating to. Of course, the credit note is a problem arising in all the indirect tax laws from sales tax, central excise, and now into GST. So whether it is a sales tax, the sales return, or unfructified sales, whatever be the reasons for the sales return, so it's always a problem in raising the credit note. It's getting now getting the input tax credit creates more problem into that. So all the practical difficulties were clearly explained by the speaker. And in today, speaker was identified by Mr. Raghavan Ramabhadran in a very quick time, and so that we were able to conduct this webinar today. So I'm thankful to Mr. Raghavan also. So in the end, the speaker has done a very good presentation. Once again, I repeat, he is very confidently and authoritatively spoken. And the sharing of views by Mr. Balaji and our secretary, Ms. Maithili Madam, Mrs. Maithili Madam also added value to it. I think N.V. Balaji wants to speak again. Yes, you may come in.
Only one point.
Yes.
Arising out of the last. Shiva, my apologies for raising the question after almost the vote of
You are
thanks.
always welcome, sir.
Since it's our own team, our webinar, I thought I will.
Definitely.
That's why I said we have all our webinars in an interactive manner.
You
That's
said
why it
120
added value. Yes.
122 does not lead to a penalty, and it is only in respect of issuance of invoice without supply.
That's 122. Yes, sir. Yes.
122.
Yeah.
But why would it not fall within suppression of turnover? If you are reducing your value, say without any reason that you just issue credit note, would it not result in suppression of turnover?
See, I agree, but the problem is it is something dealing with the question of fact. It is not, see, according to me, there is a quality issue, reduction in value. Okay, therefore, so I raised the invoice for 100 rupees. The customer never paid me 30 rupees for a very long time. So I kept on asking, me never paid. So I assume my price is fixed at 70 rupees. So I thought it is 70. I raised the credit note for 70 rupees. Therefore, I raised the credit note 30 rupees. So it is my view. Okay, and I have passed on that effect in that books of accounts. I have uploaded in GSTR1 and 3B. My income tax turnover has also come down. I have done everything. Now there is no suppression here, na? There is no suppression. I have declared into the return. Now it is for the department to come back and say, why did you raise a credit note? There is no column in the GSTR1 which says, why did you issue a credit note? What is the reason for credit note? See, again, the issue that comes in inside suppression kind of cases is that, is there a active suppression, in the sense that, is there something that the law wants you to declare, but did you declare? Did you not declare it? If the law wants you to declare, is there a deficiency in service? Is there? So it's open to the officer to ask me in writing, you issued a credit note, for what purpose did you do? Then if I say that there is a deficiency of service without there being a deficiency, then suppression would be good, because now I am actively saying something false. Till then, it's my right to assume that my customer never paid me 30 rupees. Therefore, it is allowed on me to preemptively issue a credit note, assuming that the price has been reduced or there's some quality issue. Otherwise, my supplier would have paid the 30 rupees. Why would he not pay the remaining 30 rupees? So there is some quality issue. Therefore, I issued a credit note. It has to be seen on facts of every case.
At any rate, a mere presumption, mere issuing credit note per se is not as.
See, that particular point. If I issue an invoice per se, it's randomly I issue a 2 lakh rupees invoice, sir, it is a punishable offense. But randomly issuing credit note, that activity itself does not constitute. It may result in some offshoot, which may be some offense, but that main activity itself is not an offense. That was my point.
Okay.
Income tax practitioners now debating on the GST issue. That is the success of the speaker today. I'm thankful to
one aspect I just want to add.
Yes, sir.
All said and done, this is a contract-based levy. So, if can I just issue a credit note if parties agree that this much is what we want as a reduction in the price, and both parties have consented to it, there should not be a problem. Problem is only when I issue a credit note, but by other means I still receive the money. So basically, where the credit note is a sham. So that's a different aspect.
That's a different aspect. That's a completely different aspect. That's why I said, I agreed, sir. That's why I said,
therefore, extending what N.V. Balaji was saying, that can just parties just issue credit note. So if parties agree that the earlier price which they agreed, let that be revised. Let there be a credit note. So be it, so long as they are unrelated, and therefore there is nothing beyond what meets the eye. So that should not be a problem, is what I also feel.
Yes, agreed.
Correct. Sorry.
Yeah, sorry. It was a very limited point. That was like, I raised an invoice for 100. The customer paid 70 rupees to me. I am following him up on the balance 30 rupees payment, but he is not making the payment to me. At some point, there is a breakdown of relationship. I'm not able to recover the 30. So that time, at least I as a businessman, I'm trying to reduce my losses. So what I do is, okay, then on a Shivakumar, I'm giving him a discount of 30 rupees. Or rather, a quality issue of credit note of 30 rupees. Shivakumar credit note. That is, it is not that is he asking for. Can we treat that payment of 70 and communication cut as a deemed acceptance of there is a quality issue, thereby 34 can it be invoked? That was the question, because there was no active decision. Let's say customer says, no, I will not pay you 30 rupees because there's a quality issue. Then we issue a credit note, then it's fine. That is, everything is above board. But I don't get the payment, but I keep following him up. Then I find out on 30th September or 31st October that payment is not going to come. At least I'll try to save the 18% by issuing a credit note. Can that Shivakumar credit note be called as a credit note. Though I'm saying, how do you prove it? Either way, that was the question. That was on the limited points.
No, here about just one small point. So long as you're disputing the issue, whether your credit note has any validity at all, can you on one hand you're accepting, on the other hand you are you're disputing with your customer. So I don't think it can such a credit note. I don't think can be considered a valid one.
I'm saying, I'm only saying
It may be a
these do
device.
exist.
It may be a device to overcome the time limit prescribed, all those things. Because it's not a credit note you are actually issuing to your customer to start with. If once you issue it, which customer will pay you? You'll say now you
Exactly, that's the
accepted,
point.
we'll
Say,
close the issue.
exactly the point, ma'am. What is happening here is once I issue a credit note, I'm uploading in GSTR1. Automatically, it is issued to the customer.
Yes,
So customer
absolutely.
now what? See, I'm trying to limit my losses. So there, what I'm saying is, in earlier days, I'll issue a credit note, claim the benefit, but I will not do anything in the books,
Ah,
or I will never communicate. There is no non-communication now here.
correct.
The communication automatically happens.
To add to APS, I should say it is not just 18%, 18 plus 30% income tax.
Income tax also. I agree.
The credit note session got its real credit. So we all are enthusiastically participated.
Absolutely.
Like a debate, we had this webinar. So all our programs are designed such as an interactive one. Therefore, it gets popularity and it attracts all also. Okay, Prithvi, you can conclude by vote of thanks.
I think President also wanted to
Yes.
tell one line or two.
Yes, unmute. It's muted.
You have to unmute. No, I think he's still on mute.
பிருத்திவி பக்கத்துல தானே இருக்க?
இல்ல சார், பக்கத்துல இல்ல.
Someone.
Just a sec.
No, I was just
Yes,
saying,
yes.
so in the end of the day, now 48% is the total saving if the plan of Shivakumar is adopted. 18% GST and 30%
30%
income tax, altogether 48% is a great saving. Because if a client comes to us for a civil case, we advise them that if you get a 50%, better forget it, don't file a case. So I think that even now, without coming also, you can save 48%. Right?
Don't take the risk of 50-50. Both the departments are monitoring you.
Sir, Chopra sir,
AP sir monitor பண்றாரு.
APS is listening to you. What's the point?
No. APS now with us, sir. Don't worry. Tomorrow he will say otherwise. Now he is with us. So today what he reveals, he will not reveal. But then this is recorded, so it will probably this will be uploaded
So
to YouTube. I don't know that.
Discussion, it's a thought-provoking one.
So,
Right, sir. Thank you very much, sir. It was nice that we are back again.
thank you very much to all the participants who have joined us today. And thank you once again, Shivakumar sir, for such a wonderful and elaborate discussion on the topic. And we are sure that we'll not have this longer break now between this webinar and the next one. So we will try to conduct at least one webinar in a month. So I request volunteers to come forward and conduct webinars, your personal sessions also. You can contact the webinar committee where APS sir is there, Raghavan sir is there, the president is there, secretary madam is there. So whoever wants to come forward, the platform is open for all of you to come forward and choose a topic and give your thoughts on the subject. So thank you once again, everyone, for joining us today. Hope to see you all soon. Take care till then. Thank you.
Thank you.